The Chinese currency was pushing the levels that we pushed through at the back end of last August and into September, the kind of levels that sparked some real broad risk aversion around the trade story. Mohamed, so far, and with the exception of maybe a couple of trading days, but they've been really quite muted, the pain's been really isolated. Maybe just a little bit in the Chinese currency, a lot more in the Hang Seng, but it hasn't bled out beyond that in a big way. EM's still trading pretty well considering everything that's going on around it. Mohamed, what are your thoughts on that at the moment?
I think that the central bank put is perceived to be so powerful that it has repressed even the most sensitive volatility. I think that's what's going on, Jonathan, is that we have to understand that everything is being repressed by this notion that central banks can and will do more to maintain low market volatility. It is striking to me that we are talking about YCC, yield curve control, that we are talking about negative rates, when there is no evidence of market malfunction, when there is no evidence of credit freeze, and when there's no evidence that monetary policy is a constraint to an economic recovery. And yet, we are talking about more unconventional policies. And I think that is a very sobering thought as to why exactly would central banks do more now? And the marketplace truly believes that central banks will do more, and the more the marketplace believes that, the more central banks are going to feel forced to do more.